stop scrolling. Because what you're about to hear could save you thousands of dollars over your lifetime. Insurance companies don't fear accidents. They don't fear bad drivers. They fear informed customers. Customers who understand how premiums really work. Customers who know when to file a claim and when not to. Customers who stop believing the marketing and start reading the system. And once you understand what I'm about to show you, you'll understand exactly why. Insurance companies hope you never watch this video. Let's clear something up right now. Insurance is not designed to make your life easier. It's designed to manage risk for the company. When you buy insurance, you think, I'm paying for protection. But what you're really buying is probability management. Insurance companies don't look at you as a person. They look at you as a data profile, a risk score, a future cost prediction. Everything you pay, everything you file, everything you click feeds that system, and the house always wants the odds in its favor. You've heard this before. Good drivers pay less. Sounds fair. Sounds logical. But here's what they don't say. Being a good driver does not guarantee low premiums. Because your rate is affected by your zip code, local crime rates, traffic density, repair costs in your area, medical lawsuit trends, and yes, your credit behavior. Two identical drivers, same car, same record, can pay completely different premiums just because they live a few miles apart. You're not just insured, you're grouped. This part shocks most people. In many regions, your credit behavior affects your insurance more than your driving, not because you're irresponsible, but because statistics say people under financial stress file more claims, even if you've never crashed, never filed a claim, never missed a payment. A drop in credit can quietly raise your premium. Insurance companies call it risk modeling. You feel it as, why is my bill higher again? Let's talk about claims. Filing a claim feels like using what you paid for, but insurance companies track how often you claim, how quickly you accept offers, whether you push back, whether you escalate. Small claims are especially dangerous because they teach the system one thing: this customer uses insurance often. Even no-fault claims can follow you for years. And here's the part nobody explains. You don't always see the penalty immediately. It shows up later, quietly, when your renewal price jumps. Ever notice how fast they take your payment, but how slow they handle your claim? That's not inefficiency. That's psychology. Delay increases, frustration, financial pressure, settlement acceptance. Many people accept less than they deserve, just to make the process stop. Insurance companies don't need to deny claims aggressively. They just need to make the process tiring. Here's a hard truth. Loyalty costs money. Staying with the same insurer for years does not guarantee better rates. In fact, many companies offer better deals to new customers, gradually raise rates on quiet, loyal ones. They assume you won't leave, and most people don't. Smart policyholders shop rates regularly, not because they're disloyal, but because the system rewards movement. People who win at insurance do a few simple things. They review policies yearly, avoid emotional claims, understand deductibles, separate emergency savings from insurance use, question every increase. They treat insurance like a tool, not a safety blanket. Insurance is not there for convenience. It's there for catastrophes. And once you understand that, the system starts working for you, not against you. Insurance companies don't hate you. They just rely on you staying uninformed. The moment you understand how pricing works, how claims affect your future, how data shapes your cost, you stop being predictable. And unpredictable customers are the ones insurance companies fear. That's why they hope you never watch this video. If this video changed how you think about insurance, share it with someone who pays too much and doesn't know why. Because the most expensive insurance mistake isn't an accident, it's ignorance.